It's time to meet our panel. First, we have Daniel Lacalle, PhD, Professor of Global Economy at IE Business School in Madrid, where he is joining us from today. He is a hedge fund manager, speaker, media contributor, and author of 4 best-selling books, including Freedom or Equality, Escape from the Central Bank Trap, The Energy World is Flat, and Life in the Financial Markets. Baseline view here of the global economy. So I want you to tell us about the state of the global economy, how stable it is, and what direction is it headed in, Daniel?
Thank you very much. Well, what we can say about the global economy is that what we're living is basically the hangover of the monster amount of stimulus packages implemented in 2020. That means persistent inflation, low growth, low productivity growth, and very high debt. Those enormous spending packages implemented by governments all over the world, added to the increase in protectionism, increase in polarization globally, are reducing the level of investment of most economic agents, and at the same time maintaining a level of government spending that, instead of being moderated after the enormous increase of 2020 due to the pandemic, have been consolidated and actually in some cases increased. So all of that means lower growth, lower productivity growth, lower real wage growth for citizens, and diminishing power of the currencies, and therefore an impoverishment of the middle classes, particularly in developed economies.
All right, all of you have mentioned in one capacity or another, and that is inflation. Daniel, I want to go to you now. So are we winning at all in this fight against inflation? I mean, it seems like here in the U.S., at least, from when inflation peaked at around 9%, we're down tremendously compared to that. But what do you think? Are we making progress here?
Well, it depends on how you look at it. From the government perspective, we are making progress. But as I always tell my students, if I gain 10 pounds a year and then I gain 4, I'm not getting any thinner. Inflation is accumulative. So the idea that we are winning on inflation by perpetuating is really dishonest, to be fairly honest, because ultimately what is literally happening is that in the past 4 years, the prices of essential goods and services in America, for example, have risen between 20 to 40%. And when they say that inflation is being contained, is basically just that the increase in prices is moderating its path, but it's not reducing prices. And actually, if we look at the past 6 months in the United States in particular, we can see that all of the items are actually accelerating, except for a couple of them. So I think that is one of the big concerns, is that the enormous level of government spending, which ultimately deficit spending is printing money for everybody that is watching. The enormous level of deficit spending is generating a higher level of inflation. The so-called Inflation Reduction Act in the United States, or the inflation reduction programs in the euro area, have been actually inflation perpetuating programs. So that means that citizens are poorer. And if we look at the United States, for example, we just saw that in the past 4 years, the average real wage growth has been less than 0.7%. That is almost 2.5 times lower than the previous 4 years, and that's been in a period of recovery. No, so the impoverishment of the middle class is the main consequence of this enormous level of monetary stimulus and fiscal stimulus, which at the end of the day are actually the same. No, so the problem here is to fall into the narrative that inflation is being contained and that there's a big reduction in inflation, we have to look at the trend of the past 3 and the past 6 months. And in that trend, both in the euro area, in the UK, and in the United States, the trend is actually accelerating. And I come back to the point. There's nobody in the United States or in the euro area or in China or anywhere else that looks at the rising in prices at an annualized level. Furthermore, if you allow me, all this message about the reduction in inflation comes after two changes in the calculation of CPI. So it's not just that inflation has not been contained, is that the new ways of calculating CPI, and they don't provide homogeneous tables, the new ways have actually helped reduce the percentage in the basket of
Right.
inflation of those goods and services that matter the most
Right.
for citizens, like shelter and energy.
Path down clean energy and its impact on the economy.
Well, I think that the bad thing about this path that we are pursuing is that it's politically led and not technology or industry led. Therefore, it's creating enormous levels of problems all over the world. The clearest example is Germany, as Kevin was mentioning. In Germany, they decided to shut down the nuclear terminals, and now they consume more coal than they consumed 20 years ago after 500 billion euro of subsidies for solar. So what we are seeing is uh, the lack of understanding of the energy world by politicians that simply set themselves with a target and then fail to understand the consequences. And the consequences are phenomenal. To start with, the energy transition, the way that it's been designed, requires multiple times over the level of mining of copper and rare earths and other essential elements in order to start to be achieved. And at the same time, regulation is putting more and more brakes, as Kevin was mentioning and Frank was mentioning as well, on the lending for mining. So it makes no sense whatsoever. The second problem is that by deciding to impose a percentage of electric vehicles, etc., what they're not taking into account are the phenomenal problems that are included with them. No, an electric vehicle requires 8 times more copper than a combustion engine vehicle, and they're not taking into account what is going to happen with the batteries once the useful life is over. None of that is being taken into account. It's all being driven by ideology and not driven by industry and technology. And we all defend the technological improvement that may come from the implementation of clean energies once they're fully developed. But for that, you need innovation, competition, and technology. And through subsidies and government intervention, what is actually happening is that they are putting a brake on innovation. Because it's ridiculous to think that in less than 10 years, we saw the batteries of mobile phones go from suitcases this size to this, and solar panels continue to be exactly the same as they were 10 years ago. So, in fact, this entire politically driven policy, what is actually doing is putting brakes on innovation that would actually find the solution to all these resource and availability problems that we were mentioning. So, and more importantly, if I may, is that they're achieving the opposite effects of what they want to achieve. Is that instead of reducing the use of carbon and the emission of CO2, what they're actually doing is increasing the use of coal. Instead of reducing the cost and the affordability of vehicles, what they're doing is increasing them. And more importantly, the level of contamination in developed economies has not even started to improve. So it is actually it is nonsensical, to be fairly honest, and exceedingly expensive for the consumer. All the things that we have been mentioning in the show lead to one word, which is polarization. I think that what we are seeing is that the global economy is becoming less open, less at least able to see it from a stable point of view. That generates enormous levels of disruption. And that polarization is not just coming from the geopolitical unrest, which Kevin and Frank have mentioned beautifully, and I completely agree, but also from the rise of protectionism. I am extremely worried about the rise of protectionism. In the European Union, we are seeing an implementation of massive protectionist measures that are disguised under environmental issues. In the United States, we have seen a very significant number of measures implemented to block or at least put barriers to free trade. All those things mean less growth and less real wages and more inflation. But I think that the I am very worried because Frank and Kevin have mentioned two very important things, is that the market is completely ignoring geopolitical risk. We're looking at markets right now as we speak. I'm looking at my Bloomberg screen and I'm seeing that oil is not reacting whatsoever to the rising geopolitical tensions, that markets continue to be valued at massive levels of multiple expansion, and that there is, in general, a type of, let's say, blissful ignorance based simply on the idea that the Fed is going to cut rates. So, to me, the biggest risk may come actually from suddenly a realization from market participants that, whoops, they have taken way too much risk and accumulated way too much risk for too little return, thinking that nothing was going to happen.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.